As Nedbank, what assets do you invest in as a store of value and with the goal of a return?
Good question. And I'm putting on my investment hat. It first of all depends on the goal and need that you have. I'll start with a very simple scenario. I want to go on holiday in June. I've got 100,000 Rand. I want to invest it to make sure that I have a little bit more or that I cover myself because I want to go internationally. I can't go and take that money and put it into a high growth, volatile equity fund. Can't do that because you've only got 6 months. So you need to look at number one, what is the goal? Number two, what is the expected outcome of that investment? And thirdly, what is the time period that I can actually afford for this money to grow? So we also sometimes link our investments to various asset classes. So for a very short-term investment, we'll keep it in money market deposits with banks or institutions because of the safeness of it. But it can also have a detrimental impact in the long run because cash after tax. Now remember, if you earn interest, you tax at your marginal tax rate. So a bank might quote you, you're going to get 8%, and you think that's a good deal, but your marginal tax rate might be 43%. So if you earn X, deduct 43% of it, you might be earning 4.5%. Now you're not going to get to that 8% that you were hoping for. So those are some of the considerations. So we tend to go across a spread of assets, equities, bonds, fixed income, which is cash, internationally, property, etc., etc. So it's a well-diversified portfolio range that we use, which is managed on our behalf by Net Group Investments. But again, we match that to specifically what the client's needs are. So to give you an idea, a benchmark that I always use is that if I take inflation and I assume long-term inflation sits at about 5%. So if I want a 10% return on an investment, it means I need to return inflation plus an additional 5% to get to what my goal is. That additional 5% needs to link to a term that can achieve it. So if I want CPI plus 3, I need to give my investment at least 3 years to get to the CPI plus 3. Because remember, markets do this. If I want CPI plus 7, I need to give that investment at least 7 years to go through cycles to give me over the 7-year period 5 plus 7, so 12% per annum over a 7-year period. And that's the rule of thumb that I use for many of all the clients that we deal with. And I think what we've seen through our select range that we are using for our clients, those returns are strongly coming through, but it's also then aligned to what specifically the client's needs and goals are for their specific investments. Critically important to also understand the tax implication of investments. Because as I mentioned, you might leave it in cash. SARS knocks on the door, takes the tax component, and then more importantly, leaving cash over a 7-year period, you are actually showing red flags for yourself because you're not keeping pace with inflation. So by the time you want to utilize this money, your purchasing power has actually fallen behind. So your 100,000 Rand now is not going to be 100,000 Rand in 7 years from now. So that's another important part that one has to consider.